there's not a whole lot to say here. I mean, the markets have slingshot forward to new highs. Dow, yesterday was the Dow's 9th day in a row of hitting, well, not hitting new highs, but I think it's several days in the new highs, but 9 days in a row being up. And we've had a number of actionable names on the long side appear. And, you know, these markets don't go up in a straight line naturally, and they do pull back, typically pull back to the 10-day when they do get these hot streaks. Like back in October, the S&P off lows shot to new, not to new highs, but they shot up over a period of about 5 weeks. But there was still the odd occasional pullback back to the 10-day. And you can also look at, let's see, there was a time in late 2000, where did this go? That's weird. There was a time in late 2014 where the market averages, I think it was October, shot to new highs very quickly, kind of surprising everyone. This is after a steep correction. So in late September and then into October, the markets went straight up. But of course, they also did have their requisite pullbacks. So the markets are a bit extended, and stocks are getting a bit long in the tooth. So a pullback here would be quite typical. A constructive one would indicate that or suggest that this trend will continue. We did break out to new highs successfully across all the S&P and the Dow. The NASDAQ has been lagging, but it too is on the verge. I think it's at 1% off peak prices. The Russell has been lagging more than, well, overall it's lagging more, but it's still 2% away, a little over 2% away from all-time highs. So that's all good. Everything looks reasonably decent in light of all the central banks pledging more QE if needed. So it seems like all systems are go. And speaking of which, the Japanese central bank, the Japanese economy, we know it's been mired in this problematic situation since 1990 when the Nikkei topped at, I forget what it was, close to 50,000, and it's never really recovered. All their policies were designed to keep a stranglehold on any kind of meaningful recovery, and consequently their debt to GDP is the highest in the world at 240%, and their interest rates are negative, been sitting negative for a time. And meanwhile, I think that ratio is more like 10 or 12%. So the U.S. can certainly have room to maneuver.
Hello, Dr. K, are you there? Can everybody hear me okay? Can everybody hear me okay? Yeah, it looks like somehow we lost audio. Can you hear me? How about now? Can everybody hear me? Okay, people can hear me now. Okay, we're back. I'm not sure. Yeah, there must have been a system outage there for a second on the sound. Everybody can hear us now, right? Yeah, we're back.
Okay. At what point did my audio? At what point did all the audio go out? Yep. Can you hear me? Can you hear me? I think it went out again. On my side, it looks fine. Okay, so you can hear me. At what point did my audio go out? How far back? Do I need to start over, or I was talking about the Japanese government and how they're the VIX. I was talking about the Japanese government, and then I was talking about the U.S. government has a lot of room to move in terms of increasing QE. Should I continue from that point, where I was talking about the governments and, well, U.S. government has room to move? Okay, so U.S. government has much more room to move, so we can continue printing, and these governments, from 8,000 years of history, have shown that they never pay back the debt when it gets to this level. So, you know, what they do is they extract revenue from their populations in the most sinister, ruthless ways, and that's through all kinds of methods like taxation, the passage of new laws that are very crippling to personal rights, because the prison industrial complex is free slave labor. We're seeing signs of all of this happening globally, and you know, some of these shocking headline news events are almost a daily thing. Yeah.
You can hear me now?
Yeah, you're fine.
Okay, good.
You're very clear.
Not sure what happened there, some sort of glitch. But anyways, go ahead, continue.
Okay, so anyway, these governments are, you know, overstepping their bounds. We are on the 39th day. This is reference to Ed Sekoda's book, Monopoly in the 39th day. By the 40th day, all the duckweed is doubled once again and strangles all life in the pond. Well, we're on the tipping point of that, but that doesn't mean the end. It doesn't mean that we no longer exist. It just simply means that it's the day of reckoning, which is a collapse of the existing system so that a new system, a big transformation can take place. And I think the crypto technologies in the form of some form of, you know, crypto revolution is positioning itself to basically take the baton and run with it when this does occur. The collapse could be it's probably not going to be gentle, but we don't really know the order of magnitude and how fast and swift it'll be. 8,000 years of history has shown that it is very swift. So to get to day 40, we might be looking at, you know, the next several years, 10 years, something. It might be, you know, it's not going to happen overnight, but it's at this point in the timeline of history, it looks like we're getting very, very close to this inevitable moment. We're already seeing, you know, markets being rattled and shaken up by the loss of confidence. Gold has gone up quite a bit. These people, the internet has shown that these news headline items cannot be suppressed, and more people are waking up to the lies that mainstream media, or the manipulations that mainstream media orchestrates. For the first time, the majority of people now no longer trust the mainstream media. People are waking up to what governments do and how they manipulate from every level, you know, whether it's statistics like the unemployment rate in the UK or the US, or the CPI and rates of inflation. The internet's great because there are no Chinese walls, and these revelations are being felt and understood by more and more people with each passing day. So that's all in keeping with being at the 39th day. We're going to get more volatility ahead, I believe. I mean, QE is great, and I think we are in an uptrend. It's an inarguable uptrend, and maybe the VIX model is going to sit on this the sell signal. It's sitting in XIV right now, and maybe this sell signal is going to last for a number of weeks, because some of these successful sell signals will last that long. QE is very powerful, and so that's all good and well. But I do believe still that what I wrote at the beginning, we wrote this at the beginning of the year, was that expect a lot more volatility this year, and that still goes. There's a lot of headwinds that are going to rear up, and that's going to cause steep, sharp corrections. So you've got to be on the ball in terms of keeping your stocks tight and booking your profits when you have them, and make baby steps forward with your account. Because then, if you continue to do that month after month, by the end of the year, you could be up a good, healthy double digits. Or if it's like 2014, you could be at triple digits, like Gil was in his own account. So that's all good and well. There was something that I was a bit moved by. It was something that Socrates had wrote before they put him to death. I'm not going to read it, but since his death, Socrates has been deeply inspirational to anyone who has yearned to replace many false beliefs with truths. And of course, this exposure of truths in his time, he was deeply resented by many in his day. And his teachings to the more intelligent youth carried big positive impact, naturally, against the state's wishes, though, because the state wanted to preserve the status quo. So ultimately, he was put to death. But the story of his life has always deeply motivated mine, and I think we're in that period again. Once again, the world finds itself where there's so many truths that have been covered up, but the internet being what it is now starting to reveal these truths one by one. So it's a great time to be alive. It's a fascinating time in human history. And as far as making money, I think we are going to see some serious headwinds, which will cause volatility, which means time to make money. Volatility is our friend because we make money off price differences. So instead of this being the mid-70s where the markets were going nowhere, and O'Neill I remember, when I was working for him, he was telling me that was some of the hardest and bleakest times of his trading career because nothing would move anywhere. This is going to be, I think, the exact opposite. So there's going to be a lot of profit potential ahead. And on that note, I will turn it over to Gil.
Yes, and hopefully my microphone is working. I'm not sure what happened there. Everybody can hear me okay, right? Can you hear me, Dr. K?
Loud and clear, very crystal clear.
Right. It looked, I was checking, it looked like the system had muted everybody. So I had to get in there and undo that. In any case, we are back to normal, such as it is. So the market doesn't go up in a straight line, but it sure as hell is trying to. I think the bottom line, though, remains just watching the stocks and operating on that basis. Some of the best moves have occurred in names that have come up off the bottom on undercut and rally moves. But there are some, like we have this Edu is had a nice move yesterday. But see how that's a big fake out. If you were long this thing, you could have been shaken out on the break. Did they announce earnings yesterday, Dr. K? Is that what happened here?
Sorry, yeah, they reported earnings yesterday, and so the gap, we sent that report out on how to handle this position, but the gap down 4% at the open.
Okay, yeah, and then it reverses and comes back up. Now, someone might ask, what do you do in this situation? I think it's kind of clear. You refer to your handy-dandy 620 chart, and you can see yesterday this thing sold off. It basically gapped down, and then it had a quick 620 buy signal not too long after the opening. So it gapped down before the bell and turned. So you could have just gone long again there, and if you got a sell signal again, you could have blown out of the position. But here, if you'd have been watching that, and this is why during earnings season, I think there's always potential for a lot of opportunities, trading opportunities, if you're awake to them. So in this case, if you caught this off the lows, now I think this one was on our list a long time ago. We put it on a while ago, 3 or 4 months ago. And
we mentioned it actually in a recent weekend review about how it's forming a constructive base, so watch for constructive pullbacks.
Yeah, and so after earnings, I guess you get this. Here's a 620 sell signal right there. You already have the cross on the MACD. Then you have the 6-period line pushing through, and it's up and out of there. So, that's what you have to watch for. If there's a stock you like and you don't own it, and they announce earnings and they gap down a bit, you might be watching this for a 620 reversal back to the upside. So the gap down could create a buy opportunity, and you have to be awake to that. I think those are your best opportunities in this market, buying pullbacks and weird little spin outs like this, because that's where you get a fair amount of thrust, rather than chasing strength. I think you're an utter fool if you chase strength in this market, because the market's doing okay and some stocks are breaking up, but if realistically the best moves occurred off of the lows after the market undercut the May lows and then rallied back to the upside. So we got to go through this scenario again, and we were talking about it at the time. You have the Brexit sell-off. It's the end of the world because the bureaucrats aren't going to take over Europe, and or somebody's pushing back against all the EU bureaucrats, and you undercut and then you turn back to the upside. So the strongest move you saw were on all these undercut and rally situations, ranging from Tesla to names like Splunk off the lows, where it came down here, undercut the slow, and turned back to the upside. Now what you have is everything is going sideways, and now it's a matter of looking to buy into weakness on pullbacks. Well, at the same time, if you bought some things off the lows, and I thought these were good spots to come in on, especially on the Wyckoff-ian retest that you saw in so many names that occurred about a week after the lows. Right in here, you can see classic Wyckoff-ian retest for anybody who's read either Trades About to Happen or Anna Cooling's book, what is it, Price Volume, Guide to Price Volume. Somebody want to hit me with that? What's the title of that again? Volume Price Analysis, something like that. In any case, it's all rooted in Wyckoff-ian sort of thinking, and so you get the Wyckoff-ian retest right here off the lows. So here's the pullback, and the volume's drying up as that happens in here. You undercut this low and you turn higher. So that's basically what you've seen across the board in so many names. And so the best moves have been occurring in these types of setups. So now everything's kind of chopping around. I'll show you a couple others that I've been messing with over the last several days. Workday.
The full title is it's a complete guide to volume price analysis by Anna Cooling.
Right. Okay. Complete guide to volume price analysis by Anna Cooling. So that that gives you a pretty good rundown and more of a modern look at Wyckoff-ian type of techniques. And she actually in the forward, I think it is, refers to Wyckoff as being the originator of a lot of these concepts. So Jesse Livermore picked up on it, and then O'Neill came in and picked up on it, I think in a much narrower sort of way. But I think O'Neill sticking basically to your standard base breakouts was a function of being involved in the post-World War II secular bull market, where things tended to trend much better, and breakouts would work in a grand trend, in a grand secular trend that had started after World War II. I remember when I became a broker in 1990, I think it was, and everybody gets the Ibbotson chart, I guess, and it's when you go out on sales presentations to prospective clients, you're supposed to show them this chart showing how the stock market has always gone up, and of course it only goes back to somewhere around the crash, but it was essentially a secular bull market that we were in at the time that extends from World War II, at least I think, and I think that's sort of over right now. But in any case, you have to use more tools and broaden the things that you carry in your trading quiver. So these undercut and rally moves are actually playable. You got nice moves in most cases, and now everything's chopping sideways. So let's go through some names. What's going on today? I noticed some Bible gap ups. Like, would you buy this one in United Rentals, Dr. K? Here's what it looks like on the weekly chart.
URI. Yeah, there was also a couple others, but they didn't quite look.
Well, there's also LGIH, I think it's one. LGI Homes, and then there's
ISRT.
There's a little pocket pivot there. But these are some things that are showing strength today, but they're kind of extended. I guess you could buy this if you bought it earlier this morning near the opening, because you can see it opened right up here at about 76, pulled back to a low of about 75.41, and then took off and went higher. So that's a possibility. You could look at stuff like that. Somebody's saying pull back like MLNX. Yeah, there's another example. So you can see, though, you haven't really gotten a 620 buy signal yet, but it's definitely coming up sharply off the lows. So that could set up, I mean, if this I don't know. We'll see if this thing actually heads higher, but it might come in a little bit. I'd watch the 620 chart here. And you can see you already have a MACD cross down at the bottom. You might get a cross here, or you might be starting to get a cross. So that could be, you could take a whack at that. You're looking at 2 points of risk, so about 5%, a little less, maybe 4% risk on the downside if it doesn't work. But that would be an example, yeah. And so you get, go ahead, Dr. K.
What is with something like if the stock gaps down, let's say less than 5%, like in context with this chart, it's not a whole, it didn't gap wide open, gap down wide, and rupture the chart.
Right.
Then it's still possibly in play, like we saw, yesterday. But if it's gapping down like this one did, it was off quite a bit, and it's a clear, rupture to the chart. If you do play this using the 620, there's nothing wrong with that because it's going to be volatile because it's in play. It's gapped down a lot. And therefore, you could make some quick money intraday, or swing trading this thing. But the odds of this actually just reversing all the losses and going up to new highs are extremely low. Just keep that in mind. So if you're going to play it for the short term and make some quick, you could make some quick 6 to 8% profit off something like this because it's swinging around so much.
Yeah, I definitely think you can take a shot here if you're managing it tightly. It doesn't mean it's got to work. But, in this market, sometimes what you think isn't going to work works the best, and it's a little bit like that. But those are opportunities where stock gaps down on the long side. On the other hand, you got something like Netflix, which I'm actually short right now from earlier this morning. You can see it opened up. They tried to open it above 88, and then you got a quick MACD sell signal or a 620 sell signal around there. It's gone lower since then. And this is essentially a shortable gap down. But the thing to keep in mind here is you're actually undercutting this low. I'm sure you guys can see that. You're undercutting this low here just barely by a few cents. But it's somewhat academic that when you gap down this much and you undercut a prior low, then you're probably going to get a little rally. So I think if you're trying to short this day, the high is 86.75. I suppose that you can use that as a stop plus maybe 2 or 3% of upside porosity, which makes sense for a stock like Netflix, which tends to be volatile. The only thing with this one is I've got alerts and trailing stops set all over the place on this thing in case somebody comes out with some rumor that they're going to be bought. I don't think anybody's going to buy them, frankly. We have Netflix. My kids watch it because I like to watch some of the series, I guess. There's one, I'm trying to think, it's a hospital show that my daughter is nuts about, and it's almost like soap operas. So I remember when I was in high school, all the teenage girls liked their soap operas, and they'd go over to one teacher's particular classroom who would be watching them in high school. Anyways, I guess I'm trying to remember what the name of that one is. Maybe you guys know what it is. Anybody know what the hot medical-related TV series or whatever show is on Netflix? Nobody knows. See, nobody watches Netflix. That was my point. So I don't really watch it. I go on there. I saw a great documentary the other day. I think it was on Netflix. Last Man on the Moon about Eugene Cernan. That was a great one. But in any case, getting back to Netflix. So I think you get the little bounce and you can come in and short it. And now it's starting to roll. You got the signal on the 620. So you let it bounce because it's undercutting. But if we look at the daily chart, it is down at a pretty significant area of support. You could say that this is a big head and shoulders formation. You could, because this is a little bit higher. This peak here is a little higher than this left side over here. And you get all this volume down here as you come down the right side of the head, and then you bounce once, twice, 3 times, and then now you're trying to roll over. And I think the subscriber growth was pathetic, and I think this is probably going later, or lower rather, later. Lower later, maybe lower now, but I think it's either way, later on you're going to see this thing a lot lower, closer to 60, 70. That's my thinking. Maybe down, you undercut. Let me get this. What's someone saying? I'm waiting for the new season of House of Cards. That's another show that they have? I guess I don't watch it. The one I did like, I think, was on Amazon Prime called Mozart, Drug, Sex, and Mozart, or something like that. Mozart in the, I don't know, whatever. Anyways, but let's see where you could undercut. Let's shrink this a little bit. Figure out where this might go. I guess at this point you're looking at coming down on top of this structure down here. So if that were the case, so you're looking at down here. So yeah, like I said, 60, 70 would be a good range. I know some analysts have lowered their target for the company or the stock down to 53 or 50, which is a possibility if their subscribership is imploding the way the numbers seem to imply. So, and they raised their prices. I think we got hit finally with a price increase. So I sparked a big debate at the dinner table the other night by mentioning that they had raised the price and I wanted to shut it down as a vote of consumer displeasure with the price increase. But my kids sort of didn't really want that. In any case, they started arguing over maybe getting Hulu or some other services. In any case, this is probably heading lower, but you know, here you bounce off support near term for a couple of days, and you're probably going to roll back below that low. That's what it feels like. So I'm short the stock right now, down $1.28, but we'll see what happens. So I'm watching the 620, and we'll just have to see what happens here. So anyways, some other interesting names. Here's one for you. Square. Remember Square? We were talking about this a while ago. It was just flopping around. It undercuts this low here. Tries to turn back. Now you had a pocket pivot through the 50-day moving average yesterday, and now you're trying to turn higher. I guess, you know, if everything's going to go higher, then I suppose Square will probably go higher. I think they come out with earnings next week. But that's an interesting name to watch. Barracuda Networks on the cybersecurity side. Here's a bottom fishing viable gap up here, and it runs. And I tend to think that the bottom fishing type viable gap ups in this market seem to work better than the standard ones. So while you might see this one up today, I don't know, you can see it's already stalling. It's trading about mid-range. I don't know if you can see the little tick on the side of my bar, but here's the high, here's the low, and it's trading right in here. You know, notice most of these, maybe NVIDIA is an exception and Ulta is another one, don't tend to keep going when they're going to new highs. They run up a bit and then come in. Avago is a good example of that. When it gapped up here to new highs back in early June, and then it just rolls over. So I think you got to be careful with some of these, and you can't just assume that gap ups necessarily going to run. But what I notice is some of these bottom fishers, they're playable and they work. Here's another one. Ambarella was right here. Especially if you have a pretty decent short interest, I think in most cases it can be helpful in pushing the stock higher. Somebody says, in terms of trying to find monster stocks, NVDA broke out in March and has been the leader. Now it doesn't want to give back much to buy. Remind you of previous periods? Like what? I mean, it reminds me of a stock that likes to go up. I don't know about previous periods. And why does it need to resemble previous periods? A stock that's in an uptrend is going to resemble other stocks that have been in uptrends in the past, regardless of what the general market environment is. So NVIDIA is just one of those stocks that has been very strong, but I think there's a very strong thematic basis for it going higher, which is its involvement in driverless cars or self-driving cars. So Tesla's a big customer of theirs, and Elon Musk raves about their technology. So that said, Mobileye is also a player, and it's trying to come up the right side of this big ugly base, and maybe it's a pod in the making and it heads back to 60. But so far you've had this big move off the lows. You can see here you undercut. Here's another one of these situations. Make this a little bit bigger, where it undercuts the lows of a base. See, this is a classic white coffee in spring because it's really in a consolidation. And then what happens is it undercuts the lows here, and it does this before the market sells off after the Brexit vote. So it runs up and breaks out, and as usual, the breakout doesn't really work. It pulls into the 200-day line. That's where it's viable, and that was occurring during the Brexit sell-off. So if you were awake at that point, that was a buy point. And I thought it was viable there myself, and then you get a nice gap up. But you know, you get extended here, so you sell into that. It comes back into the 10-day. You can buy it back. If you were watching it on this particular day, and I think we were during the webinar, you eventually got a 620 buy signal. I think I talked about that a couple of weeks ago or a week ago. You move back, you form a double top, and now you're just going straight sideways. So that's sort of setting up constructively. Market's coming up a little bit more. I'm looking for a little bit more of a pullback than just 20, 30 points on the Dow. I got to think you're going to snap back much more. So some people are saying we're having the Trump rally. How many of you agree that we're having a Trump rally? Are we having a Hillary rally? We're going to have the Hillary sell-off next week. But I think if you're pro-business and pro-markets, what you're hearing at the RNC is a little more heartening than what you're likely to hear at the DNC next week, I think it is. But in any case, somebody says, no way, just a rally. It's a QE rally. Everything is awesome. I like it, Scotty. You must have been drinking vodka again. Not that I can blame you. Let's see. Anyways, okay, a couple of votes. Everybody's asleep, I guess. Let's look at some other names. Look at Gigamon. Have we had this one on our list? This is at Pocket Pivots in here all the way along in here. I think it started down here. And it's continuing higher, and it pulls into the 10-day last week, and it gets a pocket pivot off the 10-day. They come out with earnings next week, so it's probably a bit extended. But these are the sorts of names that have been working. Facebook, obviously, the breakout, you get the pocket pivot right off the 50-day. Notice how you get a little outside reversal on this one. I love this. The volume picks up slightly. That was 4 days ago. Is that right? No, 5 days ago. I'm sorry. Right here. So on this day. And you get this outside reversal. It closes right at the 50-day. And it looks like maybe it's going to come in a little bit and fake everyone out. But no, it just sits at the 50-day and then takes off on a pocket pivot on Monday. And so that was viable. Also, if you draw a line across all these tops, you could say it's a trend line breakout. And then you have a new high base breakout, which I guess you'd call it this one, which would have been Tuesday. And you continue higher again yesterday. But your volume is sort of petering out, even though they are pocket pivot volume signatures. But it's breaking out. I'm wondering, is the big money breaking this out to suck in all the IBD base breakout buyers before earnings next week, and the stock's going to tank? I think if you were watching the 620 on Monday, you would have picked up the signal to get long the stock, and you could have traded it over the last 2-3 days. I wouldn't blame you if you had sold on Tuesday or yesterday on the breakout, because there's not really any volume here. And it's a nice trade, 4 or 5% of upside in a couple 3 days. I think is a decent trade off the 50-day moving average in this market, and I'll take those all day long. I'm not really playing for big moves. So, and remember last week I was spitting all over the idea that it was 1999. So this market is nothing like 1999. We had stocks like VeriSign, for example, is one I played. Didn't you play VeriSign too, Dr. K, in late 99? You must not be at his...
That's one of the easiest, most obvious breakouts.
Yeah, it was. And it actually started in 98.
Can you hear me?
Yeah, we hear you fine.
The mic's on. Can you hear me?
We hear you.
Wait, can you hear me? Can you hear me all right? Hello? Okay. That's strange. So you didn't hear the first couple of things, but the mic's definitely in the red. Like, it's showing the audio's picking it up very well. I was just saying that the breakouts were very obvious back then.
Yeah.
Of course, those were very friendly market environments. So, no-brainers.
Yeah, I mean, everything broke out. Base breakouts were occurring everywhere. I mean, you saw it in names like Oracle, which I also owned, and that's a big stock, big cap name that's established, and it had been around for many years. I think close to 20 at that point. And I think they came public in '84, so about 15 years at that time. But everything was going. Everything was moving. Even the turkeys were flying. It was a hurricane. So, and I know people want to think that this is dynamic, but you're on drugs. Either you are or you weren't. You were there and you weren't paying attention, or you weren't there, or you've been smoking some really bad stuff, some pencil shavings perhaps. Anyways, somebody's asking about Triple D. That's a dog. I don't really like the way these are acting here. They show some life, but they're really not getting going. So, I think these are on hold. And if the market corrects, I think they're going to come in more. I'm watching Netflix is coming down a little bit more. I'm still, I must confess, I've been playing around with this one. It's holding tight along the 10-day line. The volume's running pretty light today. Let's take a look. Yeah, I love you too. Let's see. I hate getting gonged like that. Okay, volume's running 49%, almost 50 below average right now, but it's sitting there. And I noticed it hasn't been able to go anywhere with the market. So I'm sort of watching this as a pod. It's been rallying because the Democrats are talking about banning guns, and Hillary says that she's going to use a presidential order to ban the Second Amendment, which that should be interesting if she tries to do that, assuming she gets into the White House. But I'm watching this and picking up some possibility because you've had some big selling in it, hitting it up here at the peak, but it's been rallying on news, and everybody thinks that if they ban guns, everybody's going to run out and buy guns. The only problem with that whole theory is that once everybody buys the guns, then they've got their guns, and then if they ban guns, nobody's going to be buying any guns. So I'm not sure how the logic works out longer term, but I think it might set up a pod here, which is a possibility. So, and it's all on news, so we'll see what happens. I am short this one a little bit higher, and I'm experimenting with this, so we'll see what happens. So Netflix now making a new low, 86.39 on the bid. Take a look here. Bada bing, bada boom, there it goes. Let's see. IBB signaling that biotechs may be bottoming. I don't know. I think it signals to me that they've had a rally off the lows like everything else. See the undercut of the prior low here, and then it turns back to the upside. So I don't really see a bottom in that. This is indicating that the biotechs are bottoming. So, and Biogen, okay, there's a gap up there. Am I going to buy that? I don't know. It's not. It's sort of stuck underneath these highs, so I'm not really so sure about that. And I don't think you can say that as IBB saying the biotechs have finally bottomed. Who knows? They haven't really come up very much off of their lows relative to just about anything else. Celgene, similar. Look at that on the weekly chart. It's barely coming up. This may be in a shortable spot for all we know. I mean, that's a possibility. And I'm open to that, and I might look at shorting Celgene in here. Did they come out with earnings today? I think it was just Biogen. Is that correct? Does everybody know? I'm going to check this.
No, Celgene did not come out with earnings yet.
They haven't. It was just Biogen, right? Biogen came out with earnings.
That's right. Exactly.
Yeah, today I guess was Biogen. Who else? There's Amgen coming out, but whatever. That's what's driving Biogen today. So the other biotechs are trying to move higher in response. I think in some cases you might look at them as shorts, although they're probably announcing in the next few days. Probably, I think Celgene is next week, something like that. In any case, and Gilead just up here. So no, I don't really, I don't know what you're seeing in the IBB, but if you think that that's telling you the biotechs are bottoming, then I think you need to go back to Chart Reading 101. Okay, so again, read Anna Cooling's book. That's helpful. And also Trade's About to Happen. I think those are two great books. And then there's the other one, Price Action Analysis, I've talked about by Laurentius. Heck, I can't remember his name either. So, but you guys go back and look at prior webinars. You'll get it. Laurencio Dumar, something like that. Anyways, maybe we'll put them up on a report or something. RYLP buyout. Relipsis. I don't, you sure it's not RLYP? Yeah. You're dyslexic like me. I do that one all the time. As you guys have probably seen, I've been watching these webinars for any period of time. Relipsa, though, it's a buyout, so thanks for telling us now. Why didn't you tell us yesterday? In any case, but that's what you get, or you get something like this, where you wake up one morning and kaboom, your stock is getting clocked. So these things are subject to news, but I think there's always a potential for buyouts in that sector. Anyways, market's heading lower. We're going minus 46 now on the Dow. Nasdaq's only down a little bit, but where could you pull back the 10-day? But you're so far up. I mean, that's straight up across the board, and you can see that you're starting to flatten out a little bit in the S&P. I would think the 10-day maybe even the top of the range. So that would take you, what, to 5,000, 49.80, I guess somewhere around there, 49.70, somewhere in there. And
We could also have what the Nasdaq did last October to November, where it doesn't have to hit the 10-day, but it just goes sideways tight,
yeah,
like it's been doing, and then it highs or new highs. So yeah, we have to, you can't assume anything when the markets are in these uptrends.
now we're down 50. I think you're coming lower, so I'm short. I'm also short this, believe it or not. Whoops, let me. And the reason why is it's been up there for a while and starting to peel off, and it's breaking the 10-day. So it rallies up to the 10-day. In my view, it's either testing the 20 or the 50, but I'm also noting that EA is starting to break down. So they tend to move together. They're sort of, well, they are cousin stocks. And I know that Nintendo has been rallying because of the Pokemon Go frenzy. So I've seen people going all over the place chasing something that I don't see, but they're looking at their phones and chasing something.
Yeah, it's added like I think 33% to its market cap, or it's just the revenues generated and to be generated are going to be phenomenal. They are phenomenal because it's the first application of its kind to successfully display the lure of augmented reality, or also known as AR, which is a step for VR, virtual reality. But this augmented reality is highly addictive, and there's going to be a lot more types of Pokemon Go's in the future, but this is the first of its kind that's this massively successful. Gil, your mic's not on.
So, anyways, if you really want to play the Pokemon craze, you could buy VoSI, which they're the company that makes the technology that I guess they use for the game. So that's a little cheesy small cap stock. I think it never has gone anywhere. It's been around for a while. It came public in 2011. So maybe this is their moment. And you can see it's pulling into the 10-day line. Volume could be drawing up. So anyways. But I noticed, I don't know if you guys heard this, maybe I had my microphone off, but ATVI I think is probably going to come lower. So I'll short these things. I'll short stocks off of their highs. I mean, I could be long something. So I'll give you an example. I could be long something like this, a Splunk, and it comes up to resistance, starts to reverse on the 620. I'll go short something like that. I'll go either way with the stock. I don't discriminate. It doesn't necessarily have to be in an uptrend, because some of the sharpest breaks on the downside will occur in things that are sticking straight up in the air. So, but there has to be a rationale for it. And I think in this case you have Electronic Arts is getting hit and it's breaking down. Volume is up and it's breaking the 50-day and it's failing on a breakout. So I'm guessing this is going to follow it. What do we have here? Oh, Splunk. That's my alerts. Sound. The robot screams out attention in a very low voice. It's pretty ominous. But they're not always bad. I'm just looking at Splunk. I was just talking about it, and an alert hit on Splunk that it's coming. It's approaching 5850 was my alert. So now I'm watching this thing approach the 10-day line. Do I want to get long? I don't think so. I think I'm going to back off here on the long side. My shorts are working pretty well. Netflix is working. This SWHC is starting to come loose a little bit. ATVI coming in. Look at SWKS running right into the 200-day. I think they came out with earnings. I would watch this for a reversal on the 620. But mostly, I think some of these stocks that have run up, look at Workday here, are vulnerable to pulling back some more. And if the market rolls over, which it could, remember, every time we've gone to new highs over the last year, the market has rolled over. And one of the things I was going to show you guys that I have up here is this is the NASDAQ percent of stocks above the 150-day moving average. You just got over 65. And back when we were at O'Neill, we used to watch this. It was the percent of stocks above the 150-day, 150-day moving average. And when it reached an extreme above 65, that was usually where you would see a market pullback, or it's telling you that things are getting a little extended. So you can see here, if we look back over the last 5 years, you're getting right up into areas where we might expect things to be getting a little bit extended to the upside. If we look at it on the New York Stock Exchange, even more so, it's actually exceeding a lot of the highs over the last several years. So it's up at 82, 83%. So, you know, this is up there as well. So this is New York NYSE percent of stocks above the 150-day moving average. And these are years, so you can see peaks here, and up here, and we're up there now. So that was pretty. So we're in a position to pull back, and we are. So I've been looking for this, and it's why I sell stocks into extended upside, and I take the trades. I'm not sitting here in most cases, even with something like NVIDIA, I'm still willing to trade that and buying it on pullbacks and then selling it when it gets extended. Another one to look at here is the bullish percent index. Does anybody look at that? That's a Dorsey Wright sort of thing. So I can remember, I think it was Tom Dorsey called me one day and was interested in getting together and talking about some joint projects with O'Neill, and O'Neill shut that down real quick. He said that Tom Dorsey was just a hack and a promoter, which I think is interesting when you consider how much promoting IBD does. So, I mean, I guess it takes one to know one when it comes to figuring out who's a promoter. But in any case, I always thought their work was interesting. And one of the, let's go to this bullish percent index. Oh dear. Too many lines there. I'm going to do this. There we go. That shows it. But you can see you're also up near highs as well on the BPNYA, the bullish percent index on the NYSE. So it's telling you're getting a little bit extended. So, you know, that's why I've got some shorts out here. And also along the UVXY. So I think it could get a decent pop from here. But I trade that on the basis of my own system, not the PVM. So anyways, so those are some things that we're telling you perhaps that we're getting a little bit extending the upside. So the pullback here I think is good and normal and needed. And so you want to watch where things are pulling back. So obviously I got my alert on something like a Splunk, on Mobileye, which is hanging tight right now. NVIDIA, you know, probably the 20-day, maybe it would become viable, or, you know, maybe it's gotten a little bit extended. That's the move it's had. So you had a breakout down here, and it's had a hectic move to the upside. Got chopped up pretty good in early 2016, earlier this year with the rest of the market, and then came out and has gained momentum, but it's way up there now. And you can see it's sort of stalling. Like if you look at on the weekly chart, and you can see this on a number of stocks, so that's why I always want to be looking at weeklies too. But you can see stalling last week on some heavy volume. So I start to get a little skeptical that this thing is getting extended and needs to do some sort of a pullback. So, you know, and those are trending nicely. So if you want to just sit with them and hold them, you can do that as long as you know whether you're using the 10-day moving average or the 50-day moving average as your selling guide, and you're trying to do something like use the 7-week rule, which I think is a sound approach for those who want to try and play a trend in a stock, because there are a few in some of these long ideas we put up, like Ulta and NVIDIA and others have done pretty well. Weibo, the Chinese, what they call the Chinese Twitter, that's another one that's done pretty well. So, you know, if you want to do that, you can handle things that way. I like to try and maximize things by trading more often. So, and you know, I suppose if I just had NVIDIA and I was 200% long in that, I'd be doing a lot better than I am. But in this market, you can't really take anything for granted. So now we're down, what, 75 on the Dow, peeling off quickly. So it makes perfect sense to me. What other names am I looking at? Any questions? Gimo selling off. Yeah, I mean, it's up there. So, you know, you could think about taking some profits up here if you bought it further down here. There were signs, you know, here's some pocket pivots in here. I think there's a nice one right here and some in here as it was turning all the way up. And it was right along the 20-day that you had your best buy points. And the last one was here or here on the Brexit sell-off, and then a retest, and then boom, you're out to new highs. So here we go. And I think Netflix becomes one of my primary short sale targets. I'd also look at Apple, because I think Apple at the 100 level, now we're at 99.82. It's probably heading lower from here. So that's a big suck. Notice how it comes up through the highs. Notice how sometimes you think you want to short it let me get my pen up here. You think I'm going to short it here, okay, because it's breaking down. It retests these lows on the Brexit sell-off. It undercut these lows, but didn't undercut this major low here. And then it rallies into the 50-day, and you think you want to short it up here, it keeps going. Well, that can happen, and notice how it occurs on light volume, so that will really throw you. But then you get this bigger volume move. I think there was some news about the iPhone 7, like big deal. But everybody gets excited, they push it higher. Now, when that happens, and let's say you were trying to short this thing at the 50-day line, which I probably wouldn't have done myself, but I do recall testing it and just didn't want to give way, so you end up getting out of the way. But now you're back up at the 100 level on these highs here. So this could just be a big, let's take a look at this on a weekly chart. Whoops. So if you look at Apple, this is really all it is. It's this massive head and shoulders complex. And it's basically been finding support down around the 92 level. I think it eventually goes through. They come out with earnings next week. Don't be surprised if it plows through that. Would not surprise me one iota. So that could be possibly a short here. But you're basically using the high of the day as your stop. What is the high of the day? 101. So that's pretty tight. You know, a little over a buck higher. So that's a possibility if you want to get short something. Generally, if I want to hold longs and I think the market's going to pull back, I just buy some UVXY. You don't need a lot because if the market does get whacked pretty good, it'll jack pretty good. It's already up 4.5% today. So anyways, I mean, you're getting right now, we're watching this happen in real time because the market was futzing around earlier when we started this webinar, and in real time now you're starting to see things break. And I think it's all pretty normal. So I'm not long anything. Whatever I had long, I sold out this morning. And that's pretty much it. And now moving to the short side on a tactical basis. So when I say tactical basis, what I mean is on a short-term basis initially looking to play a pullback. And I'll go after the obvious short sale targets. Maybe Apple's one of them, Netflix is another one, and that's heading lower. So I want to see how this thing acts when it gets below 85, but I'm looking for it to get there. So we'll see what happens. But you got to be quick in this market and be very alert. So and opportunistic, that's really the way to go. But this isn't a roaring bull market. It's decent move to the upside. We have a nice rally off the Brexit lows, and now we have the Fed. Isn't the Fed is meeting next week, right, Dr. K? So it seems like the market right now is assuming that the economy is getting better. I don't know where they get that idea from, but I suppose if you drink enough, you can think anything. Or but the metals came off on this, you know. So the idea is the economy is doing better. The Fed's going to raise rates. They're going to be back to raising rates again. And so you've seen the metals come off like gold, and you've seen the dollar rally higher. So, but I'd watch and see how this happens. I know the dollar sold off overnight against the yen on the Forex market. I was trading that, and yes, that's right. I don't sleep. I trade Forex all night, you guys. So who needs sleep, right, Dr. K? Sleep is a waste of time. Anyways, the metals come down. The metals come down. Here's a breakout you had not quite a month ago, maybe a month ago. Pretty much, yeah. Okay, and then you break out and you go higher. Now you pull back to the top of this breakout. So if you like the metals and you believe that longer term the central banks are just going to keep QE flowing, as Dr. K has mentioned many, many times, then you would be looking to buy on weakness. You don't want to buy these things necessarily on strength. So even weakness following strength is your best bet. And you can see how, for example, if you were interested in buying this as a viable gap up, because you get huge volume on that, you're better off waiting a day. You see it come and test the lows of the viable gap up day here. You can enter there and then catch this. But now you're back to where you started, and so you're better off selling into the rise in gold when that occurs. So let's look at now SLV. This one has pulled into the 20-day line. So that's where it becomes initially viable. But look at that. Even with the pullback in the metals, and a lot of people are making a big deal, you know, over the last few days that, oh, it's over for the metals, blah, blah, blah. I think they're kind of full of it. But you can see that the pullbacks, this thing is way above its breakout. And so it runs up, and if you bought it down here, you got to sell into that somewhere. And now you're looking to buy back. You can buy back here. Notice how it undercuts this low here and bounces off the 20-day line. Maybe it's going to head sooner, but this would be, or higher rather, but this would be your place to buy it right now with the idea that it needs to hold the low of today, and if it doesn't, then you're going to bail out, because then maybe it heads lower and retest the top of the base. That's a possibility. These things are volatile. You have to treat them for the volatile beasts that they are, and you have to sell into strength and then look to buy into the weakness, particularly if you're basing your view of the longer term or say intermediate term trend in precious metals, if you're basing your view on the potential for the central banks around the globe to remain on hold, including the Fed. So we would be looking for the dollar to start to reverse back to the downside. So that might be something to keep in mind. But today you're getting a bounce in the metals after coming off in the GLD, and they bring all the metal stocks. Like AEM comes to the top. This is one of my favorites. Comes down to the top of this base. That's probably a spot where it can be bought. Silver Wheaton is one of my favorites, and notice how it hasn't even budged off the peak. If it had come down to the 20-day line, I've got an alert there. I might look at buying it. And there's another one, First Majestic. Anybody know what the symbol is for that one? FAJ? No. FA? No. FJ? In any case, there's a whole pile of look that one up, Dr. K. First Majestic Silver.
Well, that's a Toronto corporation as FR. So FR? Something like that?
FJA? No.
It's Toronto Stock Exchange.
Well, First Majestic, I think, is on AG. There we go. Thank you. Thank you for that. Yeah, duh, AG. Isn't AG the
chemical symbol for silver, yeah.
Yeah, duh.
So that's logical.
And gold would be AU. In any case, that's what a Stanford education does for you. In any case, you got this one coming down to the 20-day line, and it's holding. So, you know, a lot of these things have been on fire. I think the silver, because silver has been outperforming, then I think, you know, the silver SLV has been the place to be. But I think all of these are intact, and I think they're still arguing that we're going to continue to see QE forever, and on that basis, I think you want to be watching to buy on pullback. So that's what I'd be doing. I'm already long plenty of physical metals myself from 2000, so I don't really feel I'm up to my eyeballs in them from way back then, and I don't really feel like I need to buy any more right now, although they are tradable in any case. Let's see, we're getting up to the end of the hour, so I don't know if this has been enlightening for you guys, but I think we're set for a pullback. We have our focus list. We put that out over the weekend, so you guys want to keep track of that and add the new names that we put out reports for this week so far, which I think are UBNT, Facebook, or was that last week? No, UBNT, Facebook, a couple others. But a lot of these, EXP is another one, ULTA, EDU. These are names that have already been on our list. But that's your focus list. And I think it's a reasonable buy watch list. So you want to watch some of these stocks as they pull in. And it may be that things are buyable when they start to look their ugliest. That's been the law of the ugly duckling, as we've discussed many times in these webinars. So anyways, that's all I've really got here. You know, I've shown you some short sale potential plays on the short side. But we'll see what happens. You know, I'd watch some of these others. Let's see. I'm just going to run quickly through some names I'm watching. GPN up at its highs. This one looked to me like it could be a pod sort of failure, but it's trying to rally higher. Visa, Hawaiian Airlines, some of these have pitched up in their panel. So I'm watching a lot of these to see where they end up here. Priceline holding up. Some of these are stocks that have been on my short sale list for a while. You know, I think some of these clouds that have rallied are vulnerable, like Adobe is starting to break the 50-day. But I got to say, I mostly like Netflix as a short here. I think it's heading lower. Anyways, that's all I've got, you guys. Thanks for showing up as always. We'll see where this market goes, but I definitely think you need a pullback, so I think you just lay back, watch your your buy watch list and see where things are pulling back, 10-day, 20-day, 50-day moving average. Now remember, the more things get extended for the longer they're extended to the upside and the more they're extended, the 10-day line becomes less relevant, and you have to start looking at pullbacks to the 20-day line or the 50-day line. So in a lot of cases, that's what I'm doing. I'm waiting for those sorts of pullbacks and just laying back. And I think in this market, if you're patient, you'll get your shot, and that includes also on the short side too. Anyways, that's all we got. Thanks for showing up, you guys. We'll catch you next week. Have a great weekend.